So Netflix just reported earnings and they dropped over 12%. What's going on, team? It's Ricky with TechBud Solutions, and this video is simply for awareness purposes. The reason why is we made a very similar video about last week, and it was about Bed Baths & Beyond. And it was also because they missed earnings. They had a huge drop, and since that video, again, it's not even about our video. Our video does nothing other than bring awareness for a company that was doing well in recovering, had a poor earnings, it consolidates, it finds a support, and from overall lows, it is now up over 20%, 24% to be exact. But at the end of the day, it's not about a perfect trade. It's not about buying the bottom. It's not about trying to make the most money. It's about putting your money in something that you view as a good deal, that you think that can appreciate over time. And what just happened is now talking about Netflix. Netflix has been thriving during this COVID period, and I want to keep this video super short and sweet. And if you would like me to make future videos just like this that get straight to the point and that talk about good deals of stocks that are solid companies that drop within a very short period of time, make sure you absolutely smash that like button. Netflix is down over 10%. This is the ticker symbol. Missed earnings per share. So the expected earnings per share was $1.81, and what they ended up hitting was $1.59. Revenue was up, meaning that they beat expectation on their actual revenue, and they absolutely destroyed what it comes down to the expected growth for the second quarter. They grew over 10 million, which is their second quarter in a row due to the COVID period, that they end up hitting over 10 million new subscribers within a quarter itself. They've been absolutely dominant, as it makes sense that the overall demand level for, people that want to subscribe to Netflix will go up during quarantine or during while people have more time and maybe don't want to be out and about to be at potential risk. It makes sense. And I just want to highlight the example. Bed Baths & Beyond was an example, but also that was an example when it comes down to earnings. Also, there was a very aggressive drop, and we talked about this during our Sunday Stock Talk. I don't know if you guys remember, but it was about 2 weeks ago that Facebook announced that big advertisers pulled out, meaning that there was a huge drop within a very short period of time. And what I always like to ask myself is this detrimental to the company? Is this something that's going to ruin the company? Is Netflix going to be ruined because of missing their earnings per share? Their revenue was up. Their quarter was up based off of new subscribers. They just appointed a new co-CEO. Do you think that poor earnings will have a long-term negative influence on Netflix? I'm not here to encourage you to put your money in anything. I just wanted to bring awareness. I'm all about getting something for a good deal. Obviously, Netflix has been thriving, and especially as some states re-enter this whole quarantine period, it makes sense that subscribers will most likely continue to subscribe and Netflix can continue to grow. Will this last forever? No, but within a very short period of time, Netflix dropped over 10%, nearly 12%. And I'm here to simply talk about that. So let me know in the comment section what you guys think. Do you think that it's only a matter of time for Netflix to recover? Or, again, I don't want to just talk about the potential for profit, but I also want to talk about, or do you think that it will break below the SMA line, make new lows, and continue to drop because they missed their EPS, which is their earnings per share? Please share your open opinions down below. I ended up taking a position, 10 shares, and I'm up over $148. I had 20 shares. I locked in profits when we hit $480. So I decided to lock in profits. I just wanted to have fun with it. I saw it to be a good deal. I'm not here to make it or break it. I just wanted to have fun with it. Bought 10 shares, bought the dip, saw the 10 to 15% upside potential, and I was like, hey, this is Netflix. It's a solid company. It's a company that I'm invested in, and it's something that I could appreciate, right? On top of that, I closed a little bit over $2,000 profit, but that's mainly from trading SQs and TQs. But I already did my recap earlier in this morning. So let me know in the comment section what you guys think. Also, don't forget to stay connected. You guys can join our free Facebook group with the first link down below. We have over 285,000 members, and again, we are one click away. Also, if you guys want to watch me trade live as soon as tomorrow, I only trade live and work with one group. That is the second link down below. And if you want to see what it's like to watch me trade live every single day, scroll down here, click and watch this video so you get a taste of what you get to experience every single day. I'm really excited to follow up with Nflx and its overall performance, and if it begins to indicate signs of an uptrend, then it only makes sense that I will add more to my position size. Altogether, I appreciate you guys' time, and like always, let's make sure that we end the year on a green note. Take it easy, team.